Welcome. In this explainer, we're going to break down the market DNA method. We'll walk through a specific case study on the S&P 500, showing you exactly how this geometric system is documented, phase by phase. Now, right off the bat, it's really important to understand that market DNA is a proprietary geometric model. It doesn't use any of the traditional analysis methods you might be used to. So our goal here is strictly for documentation and observation. We are not giving out any financial advice. All right, so here's our game plan. We're going to follow this S&P 500 cycle step by step, going through each of the documented phases. This structure should give us a really clear, sequential look at how everything played out. Okay, let's start at the beginning and look at the initial setup. The asset we're focused on is, of course, the S&P 500 index. Now, the documented path for this particular cycle follows a very specific sequence of phases, and we're going to explore them one by one. And that brings us to Phase 1, entry and planning. You can think of this as the blueprint for the entire cycle. We're looking at the plan just as it was established back on January 18th, 2026. This covers everything: the entry levels, the risk parameters, and even the potential targets. So this slide is really where it all begins. You can see the primary entry point. It's labeled M, and it's set at $6,872.96. But there's also a secondary entry level, PC, down at $6,820.14. This second level is a really critical part of the overall risk management plan. As you can see, this whole plan is based on a very clear set of predefined risk parameters. We're starting with a hypothetical capital of $100,000 and a maximum allowed drawdown of 5%, or $5,000. These numbers here, well, they're what define the size of each trade. So, how exactly is the position sized? Well, the source material explains it perfectly with this sentence. Both trade sizes are calculated using the hypothetical capital, the investor's maximum allowed drawdown, the third triangle domain percentage, the risk coefficient, and the contract size. It's a direct formula linking those risk parameters straight to the execution plan. So, based on all those parameters, 3 potential targets were defined from the start. Target 1 is the mirror line. Target 2 is set at apex N. And the final goal, target 3, is the top of the trapezoid. This table here outlines the expected profit for a scenario where both of those entry points we talked about are triggered. Okay, so that was the plan. Now let's see what the market actually did. This brings us to phase 2, which is called mirror contact. This phase gets documented when the price physically interacts with the model's geometry, specifically a line called the delayed mirror. And here you can see exactly what happened. First, the price actually declined a bit, and that activated our secondary entry point at PC. Then it turned around and climbed right up to make contact with the geometric structure. And we can pinpoint that moment in time. The event was recorded on January 23, 2026. At that instant, the price touched the delayed mirror at exactly $6,931.01. So following that mirror contact, the cycle progressed right into the next documented phase. This is phase 3, known as the N-level event. This is a pretty big deal because it marks the achievement of the second target we laid out in the plan. This chart shows it perfectly, the price reaching the N level. You can see this happened after the mirror contact in phase 2. Now, this event has very specific implications for how the planned trades are managed. And again, we have the specifics. On January 26, 2026, the price reached the N level, hitting the exact price of $6,947. If you remember, that corresponds perfectly to target 2 from our initial plan. Hitting that level was the trigger for an action. The second trade, the one we entered at PC, was closed out at this N level, and the realized profit from that specific trade was $1,053. So after all that, where does that leave the cycle right now? Let's do a quick summary of the current status of the positions, and then, of course, we absolutely have to cover the mandatory disclaimers. Okay, so to recap, the first trade, the one that was initiated at level M, is still open and active. The second trade, which we entered at level PC, is now closed. This pretty much completes our documentation all the way up to the end of phase 3. Now, it is absolutely crucial to understand the context of this presentation. Please remember, this is not financial advice. All of these analyses are for documentation and public verification purposes only. Risk management must follow your own instructions. Leverage above 10 is prohibited, and please do not invest essential funds. So the first position is still open, just waiting for the market to make its next move. The original documented path anticipates a potential phase 4. So the question is, what happens next? We are simply observing to see how this unfolds.